Hello guys and girls, welcome back to another episode on the Falcon YouTube channel. Hope everybody's doing great. Just want to firstly thank you for tuning in to the content on a regular basis, showing your support, and again just joining us in the live sessions and really engaging and just taking value from the material that we're providing on a regular basis. And we want to ramp things up, especially as we get towards this business end of the year. And one thing I've been thinking about a lot, and the questions I get a lot, is about psychology. Psychology seems to come up a lot because, let's be honest, we know the ratio that trading is 90% psychology, 10% technical. Some people would go as far as saying, well, it's 95, 5, whatever the ratio. We know it's overwhelmingly on the side of psychology. Psychology is the biggest thing, because strategy, it doesn't matter about strategy. There's thousands of strategies out there, but there's still traders that still can't make it or break through. Why is that? It's because the psychology of how they do things. One of the things of psychology, which I've got here on my screen, which I think is really important, this tip and this hack can really help you, is learning how to hold on to profits for longer and deal with the psychological things of pullbacks, and what does that look like from a monetary value. So let me show you on the screen so I can get into a bit of detail. So here we have Kiwi CAD on the charts. Let's say, for example, one of your emotional psychology parts that you struggle with is the swings, right? You're chasing your P&L. Firstly, I highly recommend that you don't manage your trades emotionally and trade your P&L. So don't keep going into the broker, just manage it on TradingView. You already know where your stop is, etc. Of course, when you go into the broker, manage it, whether it's on your phone or on the desktop, that's fine, but don't be checking it, watching the dollar amounts go up and down all day. That's not gonna serve you, and that's gonna make you close trades down early. So let's say, for example, we look at this double top area, shorting Kiwi CAD. Let's go back to here. So let's say, for example, you want to learn how to deal with holding your trades. What could you do? Let's say, for example, we have call it a 10K account, right? You've got a 10K account, excuse the drawing, so 10K account, and I'm assuming you're risking 1%, so you're risking £100 per trade. So if you're risking £100 per trade, and let's say, for example, you take a trade around this area. So if you bear with me, this will help you. Let's say you get involved and it happens to be in this area. You've got 50 pip stop and you've got a longer term target. Firstly, these lows here first. So the first target here is 7-1, right? So you're looking at around £700 profit. Let's say for whatever reason, you're trading that capital, and when you're up £500, £600 and it pulls back, your emotions get involved, and then you just close trades down early. So how do you deal with that? So what I want you to do the next time you open the trade, and this is based off a 10K account, you want to place your 100, right, because you're risking the 1%, and then I want you to take 10% of the 100. So you're now risking another trade. You're opening a second position for 10, right? Because £10 is 10% of £100. So you're just risking 10% of that 1% originally. Now, chances are with this £100, you might make mistakes like this. So let's play this out. So let's say, for example, you're running some profit. It's moving to the downside. Let's speed this up a little bit. So it's moving to the downside, and you want to manage your trades, whatever strategy you have, right? So at this point, how much are we running? So we'll be running around 3%. So you'll be running about £300 profit. And let's see, after we push to the downside, so now you've got 3% and now running at 4.6. So we want to see where we get the point of the swing, where we start to reverse. Okay, here. So let's play this out a little bit. So at that point, so you've got to deal with at one point, £500-ish profit, pulls back to about £350, so your stop have to be about here. So again, you've got to see 500 go back to 300. How's your emotions at this stage? Are you looking at it at £500 and thinking, well, that's enough for me for the day, let's close the trade impulsively, right, emotionally? Now let's play this out a little bit further. So we pull back. I believe this one pulls back a little bit deeper in a minute. Yeah, so you see how we're pulling back, and you've got to remember at one point you're now up like pretty much 560 odd, 570 pounds. And you imagine at a higher scale what that feels like, right? And then we drop, right? So we pull all the way back. So again, you've gone from being up around 560 odd pounds, then pull back to around 350. So you've got to deal with those emotional swings, So imagine already you're going in and you're seeing yourself up, oh, I'm up £600. You go and then check it half a day later. Oh, I'm back down to 350. How do you feel then emotionally? Do you think, well, what if that reverses all the way back? Should I just take profit now? And let me know if you've been there, if you felt these emotions. I've been in this business for over 12 years now, so I've experienced all of this stuff. And I was probably more emotional than most. So imagine now, this keeps pulling back. How on earth do you train your mind to suddenly just be able to overcome this? Because if you can't do it on 10K, bear in mind, this is just like £500-600 profit. How are you going to do that when there's £50,000 profit, £30,000 profit? How are you going to deal with, let's say, this here at, zoom in a little bit. How are you going to deal with being up around, let's call this is 15K profit, and then it pulls all the way back like so, and all the way back to, let's say, for example, £4,000 profit. Are you comfortable seeing those swings? Now, you might then say, well, the goal for me is to be completely detached. That's fine if you want to go down that rabbit hole, but 0.001% of people actually have that type of personality. So for most of us, we have some level of attachment to money. You can't be completely detached. You want to reduce that as much as possible, where it's not really bothering you that much. You don't get overly excited when you win, and you don't be overly sad when you lose, right? You want more of that neutral, balanced mindset. But you have some sort of correlation towards the value of money. So with that being said, you want something more sustainable for your emotions. So if you think about it, how do you train your mind to overcome that as much and then learn? It's the second position. So we go back to what I said firstly. Now imagine here, you've got 100, you've got the 10. So you've opened up two positions. Let's say out of pure emotion, you see your profit up around £500 and you think, well, that's enough, close the trade down. £500 profit, that's fine. And you close that trade, but you keep the second one open because, you know, let's be honest, this is going to be running at 500, that's going to be running at about £50. So the emotion involved in money, you won't be that bothered about it because that's 0.5% profit of your original 1% risk. So now you see this pullback, it drops. And let's play this out further. Let's actually go to the 4-hour time frame, right? So you can see the scope of what we're looking at here. So this big double top, this drop. So we start to play out a little bit further. And remember, you've got to be able to deal with the pullbacks if you're approaching a longer term trade. And remember, this is if your goal, if you want to hold on to these trades for longer, and you find that when you go through your advanced self-review, you find that you're constantly cutting your trades short and then they just go on to run and go on to run. And if the root cause is that you're closing those trades down because of emotion, I don't mean because you trailed your stop and you've done the right thing, that's a different story. If you're closing your trades down due to emotion, this is normally for you new traders, sometimes intermediate to be honest, because it could be the thing that's holding you back through to consistency. But now you look at this trade, right? So you close your first trade down, 500 odd profit, you're happy with it, and then you realized where you should have got out of it, if you managed it properly without emotion, would have been, let's say call it 9.1. We won't go too into the 20s or 30%, call it 9.1. So instead of £500 profit, you really should have ended up with your management 900. So there's a £400 difference there of discrepancy because of emotion. But yet this £10 trade that you risked, right? This £10 trade, you're now seeing this play out, and it's got to a point where whatever the money amount is not really important at this stage, but it will be significantly less. But let's say from a percentage perspective, you bank the 9%, right? You bank the 9%, and then you realize, well, what's different? How comes I've done the same thing? I followed the strategy on this one, but yet on the first trade, I banked the £500 because of emotion. I should have banked 900, but then I kept the other one. See, what starts to happen is it's the quickest thing for you to realize that it's the monetary value that you're far too attached to. And like I said, the goal is to never completely be a robot. I don't expect you to be, and I've not really met anyone that does that. So how can you train your mind to do it like this? It has to be a small amount, and it's got to be relative to you. So for example, if you have a 100K account and you're risking 1%, so that's £1,000, then you make it relative. So when you open a position, you open one at £1,000 risk per trade, and then you open another position that is then 10% of that, which will be £100, right? So same thing that you're doing here. So by understanding that concept, what you're doing is you're training your mind to be able to still see the trade and build the habit. This is the key part. You're building the habit of being in those winning trades for longer. And then eventually you'll realize when those moments of emotion where you think, right, I should close this trade down here because it's running at X amount, and then you're counting the dollar amount, you'll then realize, hold on a minute, follow the strategy, follow the plan. This is the most important part. And this helped me massively. I honestly believe this is probably the biggest thing that I ever done. Now, one of my mentors quite a few years ago taught me this. So when I struggled with it all the time, I would just open up a tiny position that the monetary value wasn't bothered to me whatsoever. And I would keep placing the mistake. I'd be running in a trade, let's say 4%, but the monetary amount may be like £800 or $1,000. And I would think, all right, £1,000, I'm saying $1,000 relative to everyone, right? But around these sort of figures, I would be comfortable with that and think, well, that's fine. If this retraces to this area, I might be giving back all of this profit. So I would just keep closing the trades down. But then because I opened a second amount where the money wasn't bothered to me whatsoever, it was tiny amounts, I would let that go on and go on and go on. And before I know it, I realized, I mean, it's borderline demo, right? But because it was real money, I was still able to make the association of real capital. So there's no point you doing this on open. You might be thinking, well, if I open up one trade and then I open up another on demo. I mean, the concept is there, but you still want to have some level of emotion in it. So real money is important. So try this out. This is one of the biggest hacks. I've recommended this to thousands of people. I've personally experienced speaking to people that the impact that this alone has helped them transform their trading, because they're no longer acting out of emotion. They're actually letting winning trades play out and letting their edge play out, letting their probabilistic edge play out, rather than just closing trades down because you've gone into your broker and gone, right, £2,000, oh, perfect, that's fine. Well, how long is that? How far is that going to get you? How scalable is that? And if you're someone that's doing that, let me know in the comments, because this is one of the things that you don't realize that this is the thing that's holding you back. You might think, oh, but if I only knew a little bit more about the strategy, or if I knew how to time my entry better, then I would make more profit and that would mitigate against that. That's a losing mindset. Get clear on your emotions first and at least have something practical. This little tip that I've just given you, right? This is a practical tip that you can take away and you can start that tomorrow. And even if it takes you a week, 2 weeks, a month, I don't know your frequency of trades, of how many trades you take based off of your strategy. But what I advise that you do is do this, revisit it, then come back to the video, let me know how you get on, let me know if you've already tried this out before and it's helped you, especially if you're a Falcon student, and see how it helps you overall. Remove as much as motion as possible, because think about it from a pain perspective. There comes a point in which that you see all of these trades play out and you keep looking back and think, why do I keep closing the trades down? And there's only so many times that can happen of the pain of then you still opening that second position that actually plays out, and you actually manage it the way that you should, and you reap the reward, and you trade it the way that you're meant to trade your plan, right? And you experience that so many times and realize, I need to close the gap. And I'm not saying it's going to happen overnight. I'm not saying just because you open the second position and you manage one trade, then boom, you're going to be emotionally detached. It doesn't work like that. But I'm giving you a practical tool, regardless of what strategy you trade, that you can do and you can implement straight away. Is one of the biggest things for me. So I wanted to share that with you, as I think that's going to be incredibly valuable, especially in this period right now where the markets are ramping up. There's a lot more positions. There's going to be a lot of movement, and I want as many of you in the trading space to take advantage of that. So the second position, remember, risk management is very important. So if you're risking 1% of your account, open up that second position, but that needs to be 10% of that 1%. I want to make that part clear, and I'm confident it's going to help you out. As always, thank you for tuning in. Let me know if this has opened any kind of brainwaves, if you found this useful, if you've done this before. Like I said, I'd be very, very curious to know. But as always, thank you for tuning in, guys. Let's keep focused. Business end of the year, be as dialed in as possible. The markets are looking exceptional, and I'll catch you all very, very soon. Have an incredible weekend, guys.